Today in the show we have MakerDAO's Endgame, an update to UK's Crypto Seizure Law, DREX Updates, and much more. I'm your host, Mauricio Magaldi, and this is BlockDrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. In the first drop today, we'll cover an update on MakerDAO's Endgame plan. We've covered Endgame a few times, I think even back in 2020. So if you've been around since then, you'll recall that MakerDAO is one of the top DeFi protocols carrying a lot of innovation across a variety of sectors. And they are also the issuers of the DAI stablecoin, DAI. And DAI is currently with a market cap of $5.49 billion issued, which means that there is 5.49 billion DAI that have been issued. So they're pegged to the dollar. This endgame plan is a little bit of a change in what we've seen in previous versions of it, because now it includes not just DAI, actually it's planning to replace DAI, the stablecoin, by not one, two new stablecoins, and they serve different purposes. The first one is called New Stable. And New Stable is supposed to be a user-friendly stablecoin that you can use anywhere where you could use DAI currently, but will give you more features and better yield opportunities, meaning you can get better returns by using New Stable than you would having DAI. And it's supposed to be user-friendly for builders and users alike. So it's going to be one of those plays that play exactly where we know crypto needs, which is user experience. The second stablecoin is called Pure DAI, and Pure DAI is supposed to be the ultimate, most decentralized stablecoin. And the goal of Pure DAI is to utilize as much as possible decentralized collateral, such as native cryptocurrencies like ETH and Ethereum, and the corresponding liquid staking tokens from Lido and Rocket Pool and others. Then will operate with minimal governance according to the announcement. And it will have a free floating target price, which kind of sounds like algorithmic stablecoin. It will have decentralized oracles and a simplified tokenomics that will help, according to the announcement, supply side growth. And this is to reach the end game goal of having over $100 billion issued in DAI form, or now in Pure DAI and new stable form. This endgame also includes a new governance token called Pure DAI Governance Token, and it will help the community to manage the entire ecosystem. It will be distributed across the user base, and it will be issued on Ethereum mainnet. So it will play that role of maintaining the stability of the cryptocurrencies associated to it, and will be central in the governance of the Pure DAI ecosystem. They're also launching a lending platform that will help foster the adoption of these two new stablecoins, providing better returns. So lending is one of those styles of product in DeFi that generate a lot more adoption in terms of DeFi. So this is interesting to see. I'm very interested to understand a little bit better what these two different stablecoins mean, how they're going to be operated, if they're algorithmic, if they're just collateralized or over collateralized, and also what is the goal to get to 100 billion? Because this is a very tall target for something that is currently now around $5.5 billion. It's a 20x growth in only issuing a new governance and two new different stablecoins might not be enough. So it will be interesting to see what MakerDAO is going to do to actually increase and grow the DeFi ecosystem, which it's now stablecoins will be able to foster. So very curious to see what comes out. MakerDAO in the latest run did amazing in the real world assets. Let's see if that trend continues. In the second drop today, we'll talk a little bit about an update on a new law that was issued last year and now got an interesting update, if you will, here in the UK. Every time a new law that addresses digital assets, cryptocurrencies comes out, it it makes me think about give giving it legitimacy, which is a little bit counterintuitive because it's addressing digital assets in the context of law enforcement and taxes, and in this particular case, in seizure and freezing of assets, which is very counterintuitive to crypto natives. But it's what the world is. It's the confrontation between a new decentralized paradigm in the current mainstream centralized paradigm. And these two paradigms coming in contact with each other, they will create some of these contradictory and opposing situations. So this particular new bill or update to the bill is that the last year crime bill was passed in law to aid on crypto seizures, and it allowed law enforcement to seize funds from people who were arrested for committing fraud or for committing any other crime activity with or related to crypto. Now, the new powers is that law enforcement agencies can actually go seize crypto that has been reportedly used in criminal activity without having to do any arrests, meaning whoever is suspicious of or are being investigated can have their crypto assets or the crypto assets that they possess seizured or frozen by the law enforcement, even if they're not in the country. So, according to the press release, and I quote, this will make it easier to take assets which are known to have been criminally obtained, even if sophisticated criminals are able to protect their anonymity or are based overseas, end quote. Meaning that if you had your, I don't know, NFT stolen, and the criminal isn't in the country or it's an anonymous or pseudonymous figure, law enforcement will have the mechanisms and now the law mechanisms to actually go and seize those assets back from the criminals. At the same time, if they are laundering money with crypto assets, then law enforcement can go and freeze those assets and avoid those assets from moving from side to side and obviously stopping the criminal activity. According to Chief Crown Prosecutor Adrian Foster, and I quote, it is vital that investigators and prosecutors have the capability and agility to keep pace with this changing nature of crime, which these new measures will greatly assist our ability to restrain, freeze, or eliminate crypto assets from illegal enterprise, end quote. So, of note here is eliminate. And eliminate is not here by chance. It's a measure in addressing what they call the privacy coins, coins such as Monero and Zcash that have cryptographic technology that will obscure the sources and the movements of funds. And according to the press release, these crypto assets they can be destroyed. So, in here I quote, if returning it to circulation is not conducive to the public good, end quote. So if they deem that the crypto assets that have been seized or frozen are not suitable for the public good, as they say, well, then they will destroy that. And destroy meaning they're going to send this to a wallet that doesn't exist. So it's not recoverable. Very interesting point here. We need to pay attention to this as a crypto community, but also as regulated markets, because if we want crypto to reach the mainstream, then the centralized paradigm will play a part in it being true. So it is important that we understand the implications of building in this space and also building in this space when it comes to its relationship to traditional finance and the actual centralized paradigm. In the final drop today, we're talking about the new update on the DREX program. DREX, DREX, is the Brazilian Central Bank CBDC pilot, CBDC being the central bank digital currencies. Brazil has been in the forefront of instant payments, open banking, and now digital assets, with the executives of the central bank actually being quoted as saying that this is going to be a tokenized economy. So it's an interesting development. So DREX has been going on for a couple of years. They have settled on a Hyperledger Besu infrastructure. Besu is a blockchain that is derived from Ethereum. It's an EVM based blockchain. It is run by banks and the central bank. So the infrastructure is actually run by the participating banks on the program. And one of the things that the program has encountered is that because Hyperledger Besu is based on Ethereum, the participants of the network, meaning the members who are producing blocks and securing the transactions, can see everything every time a block is recorded on the chain. So there is no actual privacy or data protection against the other participants, meaning that they cannot abide to some of the existing legislation, such as banking secrecy acts. It also imposes that some of the personal data that is being recorded will be made available through the network to other participants, which might impact data protection regulations such as LGPD, which is Brazil's version of the GDPR. So the central bank is extending this new stage to explore other requirements in terms of data privacy and data protection, meaning that the current DREX participants will now be able to explore two or three different data protection solutions and trying to get that characteristic of the traditional finance per se into the CBDC space. The next stage will now be one that participants of the financial markets that haven't joined the DREX program will be able to register and then being approved to begin testing their own use cases, not the use cases that are um, uh, postured by the central bank, but their own use cases. And those use cases will need to take into account data protection and data privacy that are uh, uh, commanded by the current legislation, which means that even if you're joining DREX in the next stage as a participant, you will need to find, or your solution will need to find ways to deal with data protection. And this might be, this might be a little bit of a challenge if the core participants cannot find a technical solution for data protection in due time, which means that the DREX pilot as it is might take longer to go from pilot to an actual implementation, which postpones a lot of the benefits that they're trying to obtain with this particular implementation of a CBDC. The solution that they might run into has also other implications, because this type of architecture that DREX is using for its CBDC is a dual layered architecture. In the wholesale layer, there is the participation of the central bank and all the participating financial institutions. And then on the retail side, there is the issuance of tokenized deposits for regular day-to-day use between the banks and their clients, which means that this is a particular breakthrough that if it happens, it can be taken by other central banks who are also exploring the same dual layered architecture that the Brazilian central bank is, which is very interesting because, as if you haven't realized yet, we're not too big in favor of retail CBDCs here in this show, but we're a big proponent of the wholesale CBDCs, which with the dual layered architecture, this comes a long way. So we'll keep tabs on this because this might push for a trend in other central banks. In a week packed full of news, here's more. Franklin Templeton upgraded their $380 million tokenized Treasury fund to now enable peer-to-peer transfers. The Brazilian Central Bank proposal to regulate the virtual asset service providers will be ready by the end of the year. Ripple and Polkadot announced that they are now participating on the DREX program, aiming interoperability. The lobby firm Stand With Crypto, it's an advocacy group, they launched their UK branch, now trying to get exposure to the upcoming UK election. Farcaster, the Web3 social platform, raised $150 million on the back of growing to 350,000 paid users and a 50 times increase in network activity since October of 2023. The Deutsche Borse will list a Cardano Staking ETP provided by Liqwid. It tracks ADA prices and staking rewards. Merge Madrid is an event that is aiming to bridge Europe and Latin America to expand Web3 across the regions and will take place in October in Madrid. WisdomTree, 21 Shares, and Invesco are three brokerage firms that secured FCA approval to list Bitcoin and Ethereum ETPs on the London Stock Exchange. FIT21, which is a progressive bipartisan crypto bill, was approved by the US House of Representatives and now heads to the Senate for further voting. Wallet Connect launched their App Kit, which aims to improve UX in Web3 for both developers and users. And Nubank Crypto now allows you to move coins to and from other wallets and exchanges. Catch us online. We're on Instagram at BlockDrops Podcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at BlockDrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shoutouts today to the people who share the links you will find in the episode notes: Jeff Prestis, Paul Brody, Claudia Mancini, Cássio Gusson, Tom Duff Gordon, Dan Romero, Frederick Gregard, Graciela Derek Fernandes, Dina White, Leandro Pereira, Emily Nicole, and Jess Holgrave. Don't forget to leave the ratings on your favorite player. This is all for today. Stay rare, stay weird. LFG.